Hey, welcome back to the show. Today we're diving into the latest earnings from Ipca Laboratories Limited. They're a significant player in the pharmaceutical space, so this should be an insightful discussion.
Absolutely. Ipca Laboratories is a fully integrated pharmaceutical company with a strong focus on both domestic and international markets. They manufacture and market a wide range of formulations and active pharmaceutical ingredients, or APIs. They also have several subsidiaries, including Unichem Laboratories, which they acquired, and international arms like Ipca Pharmaceuticals Inc., USA, and Ipca Laboratories UK Limited. Their headquarters are in Mumbai, India.
Right, so they've just released their audited financial results for the fourth quarter and the full financial year ended 31st March 2025. The board of directors approved these results at their meeting on May 29th, 2025. We'll be looking at both the standalone and consolidated figures. So, what are the headline numbers looking like for Q4?
Okay, let's start with the standalone financials for the fourth quarter ended March 31st, 2025. The revenue from operations for Q4 FY25 stood at 1,638.44 crore rupees.
And how does that compare year over year, say against Q4 FY24?
Year over year, that's an increase. In Q4 FY24, the revenue was 1,510.64 crore rupees. So a decent 8% jump there.
Okay, and what about quarter over quarter? How did Q4 FY25 stack up against the immediately preceding quarter, Q3 FY25?
Quarter over quarter, there's a slight dip. Revenue in Q3 FY25 was 1,662.68 crore rupees. So Q4 is down about 1.45% sequentially.
Interesting. Now let's talk about profitability. What's the EBITDA situation for standalone Q4?
The press release gives us a good standalone EBITDA figure before Forex, other income and exceptional items. For Q4 FY25, this was 347.15 crore rupees.
And the year-over-year comparison for that?
That's a strong year-over-year growth of 24%, up from 279.46 crore rupees in Q4 FY24. This indicates good operational leverage.
Oh, that's a healthy jump. What about the EBITDA margin?
The standalone EBITDA margin for Q4 FY25 improved to 21.19% compared to 18.50% in Q4 FY24.
Now for a quarter-over-quarter view on profitability, since the press release EBITDA isn't broken down that way, let's look at profit before tax or PBT before exceptional items.
Right. For standalone PBT before exceptional items, Q4 FY25 came in at 298.69 crore rupees. Year over year, this is up from 221.62 crore rupees in Q4 FY24, a rise of about 34.7%.
And quarter-over-quarter for PBT before exceptional items.
Sequentially, PBT before exceptional items is down from 355.52 crore rupees in Q3 FY25. So, similar to revenue, a sequential moderation in Q4.
Got it. Let's move to profit after tax or PAT before exceptional items for standalone Q4.
Standalone PAT before exceptional items for Q4 FY25 was 216.49 crore rupees. Year over year, that's a solid 36% increase from 159.08 crore rupees in Q4 FY24.
And the quarter-over-quarter for this PAT?
If we compare it to Q3 FY25, where standalone PAT, which didn't have exceptional items that quarter, was 267.56 crore rupees, Q4 PAT before exceptional items is lower sequentially.
And the earnings per share or EPS before exceptional items for standalone?
Standalone basic EPS before exceptional items for Q4 FY25 was 8.53 rupees. Year over year, this is up from 6.27 rupees in Q4 FY24. Quarter over quarter, it's down from 10.55 rupees in Q3 FY25.
Okay, that gives us a good picture of the standalone Q4 performance. Now let's shift to the consolidated financials for Q4 FY25. How does the revenue look there?
For consolidated revenue from operations, Q4 FY25 stood at 2,246.69 crore rupees.
And year over year against Q4 FY24?
Year over year, that's an increase of about 10.5% from 2,033.03 crore rupees in Q4 FY24.
What about the quarter over quarter consolidated revenue?
Quarter over quarter, it's almost flat, just slightly up from 2,245.37 crore rupees in Q3 FY25. So, a stable sequential performance on the consolidated top line.
Interesting. And consolidated EBITDA for Q4?
The consolidated EBITDA before Forex, other income and exceptional items for Q4 FY25 was 409.74 crore rupees.
Year-over-year comparison for that?
That's a strong 35% jump year over year from 304.59 crore rupees in Q4 FY24.
Huh? Wow! Another strong EBITDA jump. And the consolidated EBITDA margin?
The consolidated EBITDA margin improved to 18.24% in Q4 FY25, up from 14.98% in Q4 FY24.
Good improvement there. Now for the quarter-over-quarter profitability trend on a consolidated basis, let's look at PBT before exceptional items.
Consolidated PBT before exceptional items for Q4 FY25 was 333.05 crore rupees. Year over year, this is up significantly by 56% from 213.32 crore rupees in Q4 FY24.
And quarter-over-quarter for consolidated PBT before exceptional items?
Sequentially, it's down from 367.92 crore rupees in Q3 FY25.
And the consolidated PAT before exceptional items for Q4, the press release mentions a figure for this.
Yes, the press release states consolidated net profit after tax before exceptional items for Q4 FY25 was 270.83 crore rupees. Year over year, this is a very strong 94% increase from 139.63 crore rupees in Q4 FY24.
That's a substantial jump. What about the quarter-over-quarter trend for this?
Comparing to Q3 FY25, where the PAT attributable to owners without exceptional items was 248.14 crore rupees, the Q4 consolidated PAT before EI shows a decent sequential growth.
And the consolidated EPS before exceptional items?
Consolidated basic EPS before exceptional items for Q4 FY25 was 8.74 rupees. Year over year, this is up from 7.74 rupees in Q4 FY24. Quarter over quarter, it's down from 9.78 rupees in Q3 FY25.
Okay, did other income play a significant role in Q4?
For standalone Q4 FY25, other income was 21.49 crore rupees, up from 15.10 crore rupees year over year and also up from 17.41 crore rupees quarter over quarter. For consolidated Q4 FY25, other income was 25.82 crore rupees, up from 18.92 crore rupees year over year and up from 20.11 crore rupees quarter over quarter. So, a bit of a boost from other income in Q4.
Now, before we move on from key financials, any quick comments on the full year FY25 performance compared to FY24 for both standalone and consolidated?
Briefly, for FY25 standalone, revenue was up 8% to 6,677.92 crore rupees, PBT before EI up 34%, PAT before EI up 40%. For FY25 consolidated, revenue was up 16% to 8,939.59 crore rupees, PBT before EI up 41%. The press release mentions consolidated net profit before EI up 56%. It's important to note for the consolidated full-year figures, the company mentioned that the acquisition of Unichem Laboratories took place in August 2023. So the FY25 consolidated figures are not strictly comparable with FY24 as FY25 includes a full year of Unichem while FY24 only had it for part of the year.
That's a key point for the annual comparison.
Now, exceptional items. These seem to have impacted the reported net profit significantly, especially on a standalone basis. What were they in Q4 FY25?
Yes, they did. For standalone Q4 FY25, there was an exceptional expense of 281.54 crore rupees. This was primarily due to impairment of exposure in a subsidiary 173 crore rupees and an associate 108.54 crore rupees. This led to a reported standalone net loss of 65.05 crore rupees.
And on the consolidated side for Q4?
For consolidated Q4 FY25, exceptional expenses were 205.05 crore rupees. This comprised impairment of exposure in an associate 118.90 crore rupees and impairment of the fair value of freehold land of a subsidiary 86.15 crore rupees. After these, the consolidated PAT attributable to owners for Q4 was 67.82 crore rupees. Those are substantial impairments.
Indeed. Let's get a quick look at the balance sheet. Any major changes in equity or debt as of March 2025 compared to March 2024?
On the standalone side, total equity increased to 6,891.62 crore rupees from 6,348.71 crore rupees. Total debt, non-current plus current borrowings, reduced to 871.73 crore rupees from 1,132.91 crore rupees. That's a good reduction in debt. On the consolidated side, total equity attributable to owners increased to 6,948.45 crore rupees from 6,332.19 crore rupees. Consolidated total debt also reduced to 1,301.7 crore rupees from 1,387.5 crore rupees. So, strengthening of the balance sheet on both fronts.
What about cash flow and dividends for FY25?
For FY25, standalone net cash from operating activities was strong at 1,374.07 crore rupees, up significantly from 830.51 crore rupees in FY24. Consolidated net cash from operating activities was also up at 1,321.32 crore rupees from 944.65 crore rupees in FY24. Regarding dividends, the board has recommended a final dividend of 2 rupees per share for FY25, subject to shareholder approval. The record date is set for August 5th, 2025.
Now, let's talk about segment performance. The financial statements list pharmaceuticals as the main segment. Does the press release give us a more granular breakdown for the consolidated business, especially for Q4?
Yes, it does, and that's very helpful. For Q4 FY25 consolidated revenue, formulations contributed 1,287.59 crore rupees, up 11% year-over-year. Domestic formulations 764.05 crore rupees, up 11%. Export formulations, this includes branded 166.42 crore rupees, up 3%, institutional 111.02 crore rupees, up 36%, and generics 246.10 crore rupees, up 7%. APIs, active pharmaceutical ingredients, contributed 341.38 crore rupees, up 2% year-over-year. Domestic APIs 90.63 crore rupees, up 18%. Export APIs 250.75 crore rupees, down 3%. Other operating income was 9.47 crore rupees. Overall, the formulations business, especially domestic and institutional exports, drove the growth in Q4. API exports were a bit muted.
So, to summarize the Q4 performance and the year, what's the general feel?
Year-over-year, Q4 showed good growth in revenue and even better growth in operating profitability. EBITDA and PBT before EI, both standalone and consolidated. Margins have improved. Sequentially, Q4 saw some moderation from a strong Q3 in revenue and PBT before EI on the standalone side, but consolidated revenue was stable. The exceptional impairment charges significantly impacted the reported net profits for Q4, especially standalone. For the full year, FY25 was a year of good growth, aided by the Unichem consolidation.
Were there any other significant notes or events mentioned in the report?
Yes, a few. One, subsequent to March 31st, 2025, IPCA Holding Company acquired 100% holding in Unichem Laboratories Limited, Ireland, from its subsidiary Unichem Laboratories, India. 2. On the consolidated side, Bayshore Pharmaceuticals LLC, USA, a step-down subsidiary, entered an agreement to sell rights, titles and interest in certain product approvals and its USA generics formulations marketing business. 3. The group announced its intention to close the manufacturing facility of its wholly owned UK subsidiary, Niche Generics Limited. Production will shift to Indian facilities. 4. The company is proposing to alter its memorandum of association to add activities related to green energy generation, including solar power, for captive use. This indicates a move towards sustainability and possibly cost control. And of course, the dividend recommendation we discussed.
Now a critical part. The auditor's report. What did Natwarlal Vyapari and Co. LLP have to say? Any qualifications or emphasis of matter for standalone or consolidated results?
For both the standalone and consolidated annual financial results for FY25, the auditors, Natwarlal Vyapari & Co. LLP, have issued an unmodified opinion. This means they believe the financial statements give a true and fair view in all material respects. The company also issued a declaration confirming this.
That's good news. Any other matters in the consolidated report we should be aware of?
Yes, in the Consolidated Auditor's Report, under Other Matters, they highlight a few points. First, they did not audit the financial statements of 6 subsidiaries whose financials, before India's adjustments by management, reflect total assets of about 595.49 crore rupees and total revenue of about 459.89 crore rupees. These were audited by other auditors, and IPCA's management made India's adjustments for consolidation, which Natwarlal Vyapari reviewed. Second, they did not audit the special purpose consolidated financial statements of one subsidiary, which would be Unichem, reflecting total assets of over 3,565.50 crore and revenue of over 2,146.29 crore rupees. These special purpose statements, prepared for harmonizing inventory valuation policy and audited by other auditors, were relied upon. Third, the group's share of net loss from one associate and net profit from 2 joint ventures were based on financial statements audited by other auditors. Fourth, financials of 2 immaterial subsidiaries were based on management certification. The key takeaway is that their opinion is not modified in respect of these matters, meaning they are comfortable relying on the work of other auditors and management certifications where applicable for these components of the consolidated figures.
So, while the opinion is clean, it's built on the work of multiple auditors for the consolidated picture, which is common for large groups with subsidiaries. Okay, so considering all this, the Q4 performance, the full year, the segment breakdown, and the clean auditor's report, what's the general outlook and what are the potential risks?
The outlook appears reasonably positive. The company has demonstrated good operational performance improvement in FY25 with margin expansion. The strategic moves like divesting parts of the US generics business Bayshore and closing the UK manufacturing Niche Generics while shifting production to India could improve efficiencies further. The foray into green energy is a long-term positive. The Unichem integration seems to be contributing to consolidated growth. Risks would include the successful integration and turnaround of any underperforming parts of acquired businesses. The general pharmaceutical industry risks like regulatory changes, pricing pressures in various markets, and competition. The performance of their API export business will also be key to watch.
So, to wrap it all up, what are the main takeaways from Ipca Laboratories Q4 and FY25 results?
Oh, Ipca has delivered a strong operational performance in Q4 and FY25 with healthy revenue growth and significant improvement in profitability margins, especially before exceptional items.
The balance sheet has strengthened with debt reduction. The core pharmaceuticals business, particularly formulations, is driving growth. The exceptional impairment charges in Q4 were significant but are non-cash and relate to specific exposures. The auditors have given a clean chit, which is reassuring, though the consolidated report relies on other auditors for key subsidiaries like Unichem. Strategic initiatives like portfolio rationalization and green energy are noteworthy.
Haha, sounds like a busy quarter and year for them. Thanks for that comprehensive breakdown. It's clear that looking beyond the headline net profit is crucial, especially with those exceptional items.
Exactly. The underlying operational strength seems to be there. As always, investors should do their own due diligence. Disclaimer: we advise investors to check with certified experts before taking any investment decisions.
Wise words. And to our listeners, if you found this analysis helpful, make sure to like, share, and subscribe for more financial deep dives.